Hello and welcome to TA for Traders. It's Tuesday the 16th of January. In this short video we're going to look at the charts or the technicals on the US dollar versus the Swiss franc, so the Swissy. The code on TradingView that you need to look at this is USD CHF. What we'll see is that the US dollar's come under pressure this year. It's at the bottom of a downtrend, at the lower boundary of that downtrend. The RSI has had a double bottom. However, there's very little upside momentum and the rolling moving averages on the weekly are a concern. Let's look at those charts. So starting with the weekly, so each candle on this chart represents 1 week's trade. And you can see that even on this longer term chart, we're in a distinct downtrend. On this chart, we're at the middle of the downtrend. In the introduction, I said we're at the lower boundary of the downtrend. That's this downtrend, which you'll see on the daily. And in fact, on the daily, I've drawn a parallel trend channel, which you'll see that we're at the bottom of. But on here, we're in the middle of a longer term downtrend. At the moment, you can see we're finding support on this red line, which is the 200-week moving average, which could be good, but it is a support line, so let's wait and see what happens. However, of a concern for any upside potential is these other moving averages. The yellow line is the 20-week and the blue line is the 50-week. 50-week is now moving down, having been going up for a couple of years, and the yellow line, the 20-week, is starting to roll. We could have in about 3 to 4 weeks see that those moving averages are very close together and are moving down. That could give a big downside push to the dollar. Other factors to look at on this chart are the RSI, presently down 43.12 in this lower chart here. You can see it's in a downtrend. That's indicative of negative momentum in the market, so that looks bad. And also the MACD, the short term has gone back below the longer term and below zero, although the longer term is marginally above zero. If that comes back below zero in the next couple of weeks, that will be bad as well. Right, moving on to the daily charts. So I'll just turn off the cursor. So here each candle represents 1 day's trade. I've drawn these kind of lightish blue parallel channel indicating the downtrend channel, and you can see that we're near the lower boundary. That's bounded by yesterday's low. Obviously slightly up today, slightly oversold. RSI 35.66, and you can see on the RSI there's a potential double bottom here, the low of the 2nd of Jan and the low 15th Jan. So be aware of that. It means that if we do rally, it could be quite a good rally, but we need to wait and see. It's not sustained as yet, and we need to see some positive momentum come into the market with the RSI going back above 50. This is clarified with the MACD. They're both still moving down and are both below zero. So there's no buy sign coming out of the MACD. They're still saying it's all negative momentum. On the 4-hour picture, obviously we've rallied from yesterday lunchtime. Moving averages are moving down. We've had a bearish cross on the 20 crossing the 50. So when we get up towards the 20 and the 50, they will be negative influences. RSI's bounced somewhat, but it's still well below 50, 38.31. MACD also bounced for the shorter term, It is still marginally below the long term though. And looking at the support and resistance levels, we've got resistance from the 20 of the 4 hour, 96.91. Then at the 50 from the 4 hour, 97.45. With supports 11th of Jan, 96.040. And 15th of September, 95.65. So the key support 96.04 there from yesterday is the key support that needs to be watched. Thanks for watching the video. The key takeaways to take from the conclusions are that we're at the lower boundary of a downtrend. Yes, there's been a possible double bottom on the RSI. Also, we're getting support on the 200-week moving average, but we've still got negative momentum. That needs to be broken. We need some upside momentum for those factors to remain supportive. In the medium term, the rolling 20-week and 50-week moving averages are a concern. Thanks for watching this video. Please do remember these videos I do on YouTube are my own opinion and they are not an investment recommendation.